You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of indeterminate length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Thursday, 22nd day of December 2016. And it's also Partner Workshop Day. So partners, be ready tonight, 9 p.m. Eastern. I'd like to welcome everybody to the show, wherever you are. If you're coming back, welcome back. And if you're here for the very first time, a special welcome to you. Now, I have a chart up of the S&P 500 Emini Futures, which has actually given us a little bit of movement today, which is nice, considering what we dealt with yesterday. And if you can see my screen, there it is. Now, last couple days, if you want to know how to see the screen and you don't know how to see the screen, I'll tell you how to see the screen. Go to our homepage at cfrn.net. Doesn't matter where you're listening from, just go there. And on the right-hand side, click the big microphone. On the next page where it says Watch Live Now, click that. 30-second registration, which is good for 30 days. However, the 30 days is from the first of the month to the last of the month. So, bummer. Come January 1, you'll have to do it right along with everybody else, me too, and that'll give us a full month of January. Now, when you come in to the show, not only are you able to see the charts, but you have access to the chat box. So anything that you have on your chest, anything you want to talk about, share, opinions, thoughts, ideas, funny jokes, it's okay. Keep it clean. You got a global audience to share it with, so you won't find that in every coffee house. Okay, let's look at the numbers. That's where we usually start out. Just kind of getting an idea, a feel for the global markets and everything that's happened in the market so far today. Here in the U.S., let's see. Now, these are the cash numbers, not the E-mini. The Dow. Could I get a refresh? There we go. The Dow is down 48 points. NASDAQ, boy, that 20,000 just remained too elusive. Did I tell you yesterday that I thought they would try to hold it back until next week and then all of a sudden run it and run it hard so that it sticks when that final bell rings on New Year's Eve, or whenever the final bell rings? Okay, NASDAQ down 35, S&P 500 down 8, Russell 2000 down 14. Mover and shaker there, NASDAQ, that's a 0.5%. And the Russell, that's off by a little over 1%. Our commodity basket, crude oil is trading at $52.93, up 44 cents. And gold is down $2, trading 11.31.20. All right, moving to the Asian markets. Nikkei down 16 at the close, 17. Shanghai down 2 3/4. Hang Seng down 173 points. That's almost 1%. In the European markets, which just closed, the DAX down 12.5. FTSE up 22. CAC up 0.81. So I guess they can say they ended positive for the day. That's 0.81. Okay. What kind of a percentage is that? That's 0.02%. All right. So the theme of quiet markets seems to prevail worldwide. I mean, when a market is open all day and closes at, well, we know we got a doji on the day there. If that thing closed up 0.81, 0.02%, if we went and looked at a chart of that, I'm sure that's what we'd find. But we won't. What we're going to do is we're going to go hip, hip, hooray for a perky little Kellyanne. She has been so effervescent throughout this presidential campaign. I mean, I would have really been, I think America would have been disturbed if Donnie had not given Kellyanne a permanent position. U.S. President-elect Donald Trump today named his former campaign manager, Perky Kellyanne Conway, to, or should it be Kellyanne Perky Conway? I'll have to work on that. To serve as counselor to the president. His transition team said in a statement. Is he creating a job? Conway, 49, currently as senior advisor on Trump's transition team, is widely credited with helping him bring a more disciplined approach to campaigning that helped him win the November presidential election. In her new post, Conway will play a key advisory role in the White House when Trump takes office on January 20th, helping to manage the New York businessman's meetings and legislative priorities, according to the statement. So I'm guessing This is like glorified administrative assistant. What was the title they gave her again? Counselor to the president. In her new post, Trump said Conway has played a crucial role in my victory. She's a tireless and tenacious advocate of my agenda and has amazing insights on how to effectively communicate our message. In an interview with ABC News shortly after the announcement, Conway said Trump was finalizing his communications staff and was preparing to announce his choices for White House press secretary and related posts soon, but gave no other details. Well, good for you, Kellyanne. I've always kind of liked you. The fact that you stood up to Donald that weekend, that was a long weekend, when he had Mitt Romney up to the tower to consider him for, was it Secretary of State? And Kelly went on the Sunday morning news shows and she goes, "Now that's wrong." And, you know, I bet there's not too many people on this planet that Donald Trump would allow to say that's wrong or you're wrong and not fall back into his old role as the apprentice and say, "You're fired." But he didn't fire her. It's the amazing thing. In fact, I don't think he even tweeted about it or called her on that Sunday night. It was on Monday that you saw them together, all smiles. So, what do you know? Good for you, Kellyanne. Glad you're going to be around. Because I really do think she keeps him on somewhat of a short leash. It's only when he wakes up in the morning really early and can get to his phone and start tweeting before she has a chance to be present and say, you know, let's think about that. All right. At this point, let us roll it over to Michael and let him pop in if he's ready and tell us about what happened in the live trading room today. There wasn't a lot yesterday. There was a lot more today.
A lot more than yesterday.
Like three times as much. So,
yes, just about.
But the important things we accomplished, and so that's always a blessing. And Michael will tell you all about it. I can see your screen, and so I will now hit mute on my end.
Excellent. All right. All righty there. So, excuse me. Here we go. Good afternoon, everyone. Today is Thursday, the 22nd day of December, 2016. 3 shopping days left. All right. So just today in the live training room, it took us 11 minutes and 3 trades to get to our goal for the day. When we closed out that third trade, we were up $120 a contract. Today we took a total of 8 trades, and I believe the gross today was $367.50. We were plus 16 on the beans, plus 14 on the euro, plus 6 on crude, and plus 2 on gold. Okay. Now, let's go over those trades. All right. Gold, we only had the one opportunity right here. The one that we were able to take advantage of anyway, right here, and that was 2 ticks profit. And then you see we missed a few right here on this move up, and there's a gap right there. Huh. How that happened. Anyway, we missed another one over here, and another one over here. Now during the break, after it broke this dynamic support right here, during the break there was a shorting opportunity here to capture that leg, right there to capture that leg, and right there to capture that leg. And right now, the cycle's starting to go up kind of steep, so I wouldn't do anything with it right now. Okay. The euro. Let's scroll back a little here. The euro had some great movement today. We didn't get too many of them, but we did get a couple. Okay, we missed this one right here, this one, and this one on that huge leg up right there. Okay, then the cycle was going down too steep to go long anymore, so it turned around and it started going short. We needed to break this dynamic support before we could short, though, and we broke that with this bar right here. Then it pulled back up, tested the BBC, but the cycle was the wrong color. So we had to wait until it closed below the trend line. Once it closed below the trend line, then we had an opportunity to take 10 ticks out of it. That's what we did right there, 10 ticks. Okay, we missed that one right there. We got 4 more ticks on that, putting us at 14. Missed that one and had a break even right there. And then during the break, it meets the requirements. I just don't like the cycle being flat and above the bias line like that. But they could have been a short off the BBC right there. And a follow-up short right here. That would have been a break even. We weren't trending on the long side there. The black step line crossed below the BBC, so there's no trade on the long side. And we had not broken dynamic support, so there were no more trades on the short side there. Okay, so that was it. 14 on the euro and 3 trades. In crude oil today, let's see, we had this one spot right here in crude bounce off the BBC type. Then we had 6 ticks right there. And we missed that one, and that one. And during the break, it's just been really choppy during the break. So there really wasn't anything here during the break. Alright, we ended with 6 ticks on crude. And the ES was just a total miss this morning. I had pointed out this down close below the trend line here, but I said I didn't want to do anything with it because I don't like trading the ES when it's so close to the zone like this. And then it just got sucked right back into the zone. Since then, though, it's gone almost down to the zone below us. Alright, those of you guys who were doing the daily double, you know the entry was here at 54. And the initial target was down here at 51. So you should have some profit locked in, or at least have the risk off your trade. Okay. That is it. That was our morning this morning. So bring this back up. Plus 16. Oh, did I go over the soybeans? I don't think I. On the soybeans, we had this one move right here. Well, there's a couple. There's one that's missing in here. I think it was right here. Right here. Our first opportunity on soybeans was 2 ticks, and then the next one was 6 ticks to put us at plus 8, and then over here we got 8 ticks right there. Okay, we missed that one and that one right in there, and then the soybeans just flattened right out. Okay, so we were plus 16 on soybeans. There, now I can go back to this. Plus 16 on soybeans, plus 14 on the euro, plus 6 on crude, plus 2 on gold. Gross is 367.50. Okay. Today, 11 minutes, 3 trade opportunities to get to the goal at 120, and total of 8 trades. So on the month now, 2637.50, 16 trading days, $164 a day. On the year, 53,577 over 241 trading days, averaging 222 a day. If you're going to look at the spreadsheet, you have to make sure you go down here and read all the risk disclosures. Okay, all the required CFTC risk disclosures. So we are in compliance. And that's it, guys. If you have not taken a free trial with us, go here to the home page at CFRN.net and just scroll down to where it says free 5-day trial. Then where it says start free trial, no credit card required, just click there and fill out this little form. Once you fill out this little form, you'll be sent a link to get into, you'll be sent a confirmation link that you must click. Once you click the confirmation link, then we know that you took the trial. Okay? We don't know you took the trial until you click on that confirmation link. All right, and that's it. That is all I have. So with that, I can pass it back out to fabulous Phoenix, Arizona. Let me get our eyes while we're doing this. There we go. Okay, and we'll just pass it out. Fabulous Phoenix.
So you really are convinced that it's fabulous, huh?
I just think it sounds nice. And you are looking over the biggest park in the world.
The largest city, America's largest city park.
Okay, America's largest city park. That's pretty close to the biggest park in the world.
Okay.
All right.
So our daily double on the ES, it came within
2 ticks of the target.
2 ticks. What? I've been robbed. However, anybody that wanted to lock in their daily goal, didn't that make it a 3-point trade?
Yeah, you did.
Okay. So somebody just wanted to log in their 2 points. You had the chance to do it. All right.
Yes.
Okay, dope.
Yeah, the thing.
Yeah, go ahead.
I was going to say, I just went through the last few days of daily doubles from Friday to today. And on 2 of the daily doubles, there were Crude daily doubles. One of them went 30 ticks before it pulled back, and then it went to the stop if you had not moved your stop to break even.
Right.
And the other one went within 3 ticks of the initial target, and the initial target was, I think it was 25 ticks before it pulled back. And if you had not moved your stop to break even, it would have taken you out.
Hey, so we've talked about that a lot here the last couple of days. I've showed guys examples when I go through the Concierge Trade Alerts where, there's 2 schools of thought. There's the school of thought that says you get your stop to break even as quick as you can, which is what we've employed successfully in the live trading room for 4 years. There's the Mark Douglas theory, I call it, which is this applies to people trading in multiple contracts, is you don't move your original stop. What you do is you pay yourself on the way down because you've already assumed the risk, and so you keep your risk where it was, but you pay yourself on the way down. In other words, at this point, I'm going to take off 3 contracts, and at this point, I'll take off another 3, and then at this point, I'll take off my final 3. Or I'll let the market come back and take out my final 3. That's one way of doing it. And then there's the other way that says, you're going to get your stop to break even as quick as you can, and then you're going to trail that thing, and you're never going to get a real, ripper and a runner that way, but you're going to be pretty consistently profitable if you're entering in, in some trades that do have some high probability with them. So I just want people to be aware that outside of the live trading room, if they're trading Concierge Trade Alerts, daily doubles, other things, they have options at their disposal, and they can, whatever fits for them based upon maybe their work schedule, or what they're doing, or the amount of size of their account, their risk profile. A guy who's making $250,000 a year and a guy who's making $50,000 a year, I mean, they're both, doing okay, but one is doing, I guess 5 times better. So does that mean he can afford 5 times more risk? Well, only if he has first learned how to trade and has earned his way up to trade in that larger category. Just because he has more money doesn't give him any greater advantage than the guy with the smaller account. Because if the guy with the big money comes and starts just throwing money at the market, guess what? He'll be eating lunch in the same place as the guy making 50K. So, I mean, you got to really be careful and cautious, and that's why our mentoring program's 90 days. unlike the guy on late night TV that says he can teach you to trade in 5 days for $7 grand. You know, that's just ridiculous. That's like telling me I'm going to teach you how to fly an airplane in 5 days. I don't care how much money you pay me. I can't teach you to safely fly an airplane. Well, I can't teach you how to fly an airplane, period. But a pilot, I mean, he might could give you some crash course, but I'm afraid that's what it would end up being, is a crash course. You know, things take time. And, you know, $7 grand, you go, wow, in $7 grand, I'll be able to, like, you know, be a big shot on Wall Street. Well, no, you won't. You'll be a guy who's out $7 grand and has a little bit of knowledge about the market. You still won't know how to put on and take off trades. That's why we have so many of their clients that become our clients, because we charge a fraction of what they charge, and we give you, I don't know, 6 times as much training. We give you, no, more than that. They give you 5 days, we give you 90. I don't even know how, I can't carry that one. Carry the one for me. He's going to carry the one. It's a lot.
Sorry, I shut my mic off instead of turning it on. That would be 18 times as much.
18. We give you 18 times as much for a fraction of the cost. So, now, also, don't get caught up in the, well, if his costs more, it must be better. No, that's not true. Some people really have a compulsion. They have to touch the wall and make sure it really is wet. Although there's 10 signs down the hallway that say, warning, wet paint, please do not touch. Some people, it's like an obsessive compulsive disorder. They got to touch it. And so some people have to go to those kind of courses, and they have to lose the $7 grand, and then they have to come to their senses and come to us and go, okay, maybe you're right. Maybe there is no magic, and maybe I just do have to learn how to read a chart and learn how to read the indicators and, you know, find high probability trade setups and have a business plan. Wow, you sound like one of us. Come on in. Tonight is our partners meeting, as Michael may have mentioned, and if you want to be in that partners meeting at 9 p.m. Eastern, there's only one requirement. You don't have to wear a coat or tie, but you do have to be a partner, okay? Got to be a partner. That's why it's called the Partners Workshop. So Michael's probably already sent you an email if you've been on the trial or if you've been on the open house. I don't know if he actually sent offers to the open house people or not. But if you're within the sound of my voice and you want to find out what it takes to become a partner so that you can be in tonight's partners meeting, start your 90-day mentoring program, own the indicator set for life, and then come next Tuesday morning, because Monday's going to be a holiday, so there will be no weekly trading zones on Monday. But Tuesday morning, you'll get the weekly trading zones that you typically will get on a Wednesday. I mean, on a Monday. Okay? You'll also have access to the members area of the website where there's well over, I'm just going to be honest, there's over 2,000 hours of live trading and training videos, but I usually just say 1,000. I just say over 1,000 because that kind of freaks me. I realize it started to freak people out. Oh man, I got to watch 1,000 hours of videos to learn how to do this? No. However, knowing that you have that incredible library behind you so that whenever you need a little pick-me-up or a little training or a little something, and you don't have a mentoring session scheduled, you can go into the library. You can pull down one of the workshops off the shelf and you can watch it. And because trading can be a lonely business, and sometimes just being able to hear another person's voice talking about trading can help you feel a little better. If you have just, maybe it wasn't a bad day, it was just a melancholy kind of day, and you have no one to talk about it. So I know you can't talk to a video, but You can always sign up for a mentoring session and talk to me. But you have to do that 12 hours in advance, because that way I'm able to plan my schedule. I know it's hard to believe. I actually have a life too. So by the time 6 a.m. rolls around and I get up and get in front of my computer, I know what my day looks like. I know who I'm going to be mentoring that day and who I'm not going to be mentoring and all that good stuff. So Michael, thank you, sir, for all that you bring to the table.
All right.
We sure appreciate it. And we're going to talk here for a minute, guys. Now, today is Thursday, and I had a promise from Garrett back on Tuesday when he had wanted to come on the show but couldn't. And then on Thursday, he said, or Tuesday, he said, I really think Thursday will work. So he very well may be popping in. Should check my email and see if he's sent anything over my way. Not yet. Guys, all these reports that have come in for the for that research report on the gold stock, I'm doing my best to send them out. I mean, I sat in my chair last night, so I couldn't sit up anymore sending them out. What happens is, because it's a 150-page report, when I go to attach it to the email, there's no lag in sending it. My internet's got plenty of speed. It's something about attaching it to the email. I like nod out. It's attaching to the email. It goes really fast until it gets right to the very end, and then it just creeps along. And then when I hit send, whew, it's gone. So anyway, I've only got a few more I've got to get out, plus whichever ones you send me today. And but I'm kind of on top of it now. I mean, I got buried last night, so it's a good thing. And I look forward to talking with you more about it as time goes on. We're not looking for any overnight, sensation, no get-rich-quick scheme, none of that. So people are building a solid company. It's a new management team with a completely new business plan, very different from before. And I am actually meeting with the CEO myself personally tonight. He's flying into Phoenix to have dinner with me. And we're going to talk about a thing or two. So I'll have some great information for you come tomorrow. Okay. What did I say we were going to talk about? Oh, we got to talk about this Trump thing. I'd like to know your feelings. Hey, can somebody put a Y in the chat box? I see we don't have any unanswered questions. And we can't see the chat box until somebody puts something in it. So could somebody, please? Hello, is this thing on?
I hear you.
Well, what's it take to get a Y in the chat box? Thank you. Everybody's asleep at the wheel along with the markets. The markets have put everybody to sleep. Thank you guys, all of you, so much. Now I can see the chat box. Okay. All right, on Thursday, that's today, President-elect Donald Trump's administration is considering imposing a 5% tariff on all imports into the United States. Now that's across the board. I don't care where it came from, 5%. While the decision is not final, sources told CNN the tariff could be implemented through an executive order in the early days of the Trump presidency. The move is not surprising given that Trump made free trade one of the central topics of his campaign after criticizing China, Mexico, and Japan. He suggested putting a 45% tariff on Chinese imports, said he would declare China a currency manipulator on his first day in office, proposed taxing imports from Mexico, argued in favor of ripping up trade deals, and called the Trans-Pacific Partnership, or TPP, which Hillary was just so in love with, a rape of our country. After the election, Trump has said in victory rallies that for trade, you have to almost look at it as war, asking, who cares if there's a trade war? Specifically for China, Trump said the country is committing the greatest jobs theft in the history of the world. William Buter, chief economist at Citi, wrote in a note to clients before a report of the new tariff that protectionist trade policies might spark a global trade war, which could easily trigger a global recession. Deutsche Bank also addressed the negative risk of the Trump trade agenda. The team from the firm wrote in a note on Friday that the biggest threat to growth is a possible protectionist turn, which could depress global trade and even trigger trade wars. In addition to the tariff talk, Trump also appointed Peter Navarro as head of the National Trade Council on Wednesday. Navarro has been a longtime critic of China, writing a book entitled Death by China. While these moves do not signal a coming collapse in international trade, they do suggest that Trump's more protectionist tendencies will come out during his time in office. Additionally, a tariff of any kind is likely to spark a reaction from major U.S. trading partners such as China. Chinese officials are reportedly weighing options on how to respond to hostile trade moves by Trump. Given the moves by Trump, we've broken down just how a protectionist trade scenario could impact the U.S. economy and the geopolitical order. A 5% tariff may cause some imports to the U.S. economy, higher costs, a slight drag to GDP growth, but economists are worried about what it signals going forward. Michael Gapin, a chief U.S. economist at Barclays, has estimated the economic drag from tariffs on imports from China and Mexico may also have on U.S. GDP growth. Assuming a 15% tariff on Chinese imports and a 7% tariff on Mexican imports, modestly above their current levels of 2 and 10% respectively, depending on the good, Gapin estimated that the U.S. would see a 0.5% reduction in annual GDP growth in the next year. Meanwhile, Buter said that Citi estimates trade and other policy uncertainties could be as much as a 1% drag on U.S. GDP over the next year. And should the president-elect eventually decide to follow through with any of these policies, the U.S. risks retaliatory measures from other countries. If tariffs are more punitive and lead to a public trade spat from China, markets will get nervous, especially if a sharp retaliatory Chinese yuan depreciation looks like a realistic response. Now, I wrote about that last night. If this pattern is followed by other countries, it could lead to a downward spiral or litigation at the World Trade Organization. Depending upon the specific measures, retaliatory action from elsewhere could be expected, while the risk of trade and currency wars could grow. As far as how this affects individual Americans, you and I, the man in the street, and the lady, an increase in tariffs could be passed through by companies in the form of, you guessed it, higher prices. This is the inflation that Janet is so concerned about. And it's the thing that she and Trump are going to probably square off and go a round of rock'em sock'em robots. Parts from consumer items are made abroad, and so increasing tariffs can make it more expensive to import these parts for goods. In order to protect corporate profits and margins, companies would hike prices, which is not ideal for consumers. A crucial thing to consider here is that this type of price increase is not caused by the virtuous wage and price increase cycle, but rather an exogenous shock to prices without a boost to the labor market. Well, remember yesterday we read the article, everybody's already got a job. In plain English, that means that while parts manufactured in China instantly become more expensive for Americans, wages do not necessarily go up to the corresponding amount to offset the cost increase. Theoretically, companies could avoid tariffs by producing more in the U.S. Okay? Problem here is, however, that labor is more expensive in America. So even if companies begin production in the U.S., the increased labor costs would still push up prices. Not only could Trump's moves impact everyday consumers in the U.S., but they could upend macroeconomic policies. Terms like that just make my head want to explode. Macroeconomic policies that have been in place for more than half a century. As Buter notes, these policies have increased worldwide prosperity and have been positive developments for the U.S. Cities economist goes on to say, and then I'll wrap it up, we stress the potential multipliers of change in the U.S. position on international trade. The U.S. has been the champion of free trade and open borders for decades. A retreat from globalization by the U.S. would likely lead to reciprocal actions from other countries and reinforce the latest shift towards deglobalization, and could be another nail in the coffin of the liberal global economic world order that has supported prosperity since 1948. Now, I just want to ask you this. Is there anything that we get from foreign countries that we could not manufacture here in America? Now, maybe we buy our chips from China because they're making them over there cheaper, but some responsibility now falls on the iconic companies like Intel to start producing in the United States and create an acceptable, affordable chip for the consumer. We've been dependent on foreign oil for so long, and somebody correct me if I'm wrong, because I often am. If I'm not mistaken, the single largest known oil reserve exists where? Iran? No. Okay, you give up somewhere in the Middle East. No. Where? The United States of America. President Obama's administration has already suspended its efforts to win congressional approval for the deal before Trump takes office, saying its fate is up to the president-elect and Republican lawmakers. Americans want jobs. Well, doggone it, yesterday the article said all Americans had jobs. Janet, in her speech Monday at that college, she said we're at like maximum employment. Mainstream economists generally agree free trade is good for an economy in the long run, even though within an economy there will be some people who will benefit less, particularly in the short term, while trade restrictive measures hurt consumers. 89% of Americans think the loss of U.S. jobs to China is a somewhat or very serious issue. Only 46% of Americans think NAFTA was good for the economy. There's actually there is some empirical evidence to back up these grievances. Yeah. This gets pretty long and it starts to get pretty boring. We're going to live through it. Hey, I mentioned this morning in the live trading room that The Man in the High Castle is back. It's part of the Amazon Prime network, which is like Netflix. If you're a Prime member at Amazon, you get Amazon's movies and TVs for free. Now, this is a Amazon original. In other words, they didn't buy this from some other network or studio. They actually produced this themselves. It's so intriguing. Think about this for a minute. What if we had lost World War II? Now, we all grew up, you know, 50s and 60s, and we were the world's superpower, and we had won World War II. Not only had we won, but we treated those that we whooped their butt. After they surrendered and signed their peace treaties, we treated them with dignity and respect. We even gave them American dollars to try to rebuild their cities, and their homes, and their places of business. No other country besides America has ever done that. But imagine, if you will, for a moment, the dark day that I guess we know as D-Day. I'm going to get my wars mixed up. But the announcement comes over that the Americans have lost. And so that's what The Man in the High Castle is about. It's a fictional story of what if. And in this what if story, the Germans run, I believe it's the eastern half of the United States, and the Japanese run the western half of the United States. And they occupy. See, when we won these wars, we didn't go occupy these other countries. We didn't put a standing army there. If we did, it wasn't for very long, just to make sure there was no trouble. This was a permanent standing army, and you had to fetch and step and honor their customs and live under their laws, and it was crazy. However, there was this groovy little gnarly underground movement, and for some reason they needed to get these films to the Man in the High Castle. And the whole season you never knew who the heck this Man in the High Castle was and why these films were so important. You know what? I want you to watch season 1 and let you enjoy it and let you arrive at your own conclusion. But I bring this up because December 16th, they released season 2. We thought it was going to be a one-off. We didn't realize there was going to be a second season. So we're pretty excited to get started on it. And it's a beautiful thing about Netflix and Prime Videos is instead of watching an episode for an hour and then having to wait a week to see the next hour, you can just binge. If you don't have anything better to do, you can watch one episode after another, 1 week after another, after another, after another. Yeah. Don't forget to get up and go to the bathroom and have a little nutrition, okay? It's important. Get some blood flowing. But watch it. I mean, that show, that movie, TV program, got inside my head. And as I said in the trading room, I won't say it caused me sleepless nights, but it left me kicking the covers a few nights, just thinking about what life would be like and how much we're able to take for granted. Not because of the grace of God. Well, my point is that it truly is the grace of God, but it's because we won the big war. And we're thankful for that too, because without God's help, I don't think we could have. But His hand was upon us. He's always said, whoever stands up for Israel, you don't have to worry about a thing. I'll take care of you. So, I know there's a lot of questions in the chat box. Let me get at them. Yeah, Bob, over at YouTube, I just don't have the time or hands or manpower to monitor that chat box as well. And so, I'm sorry for that. But you can come here. It's wonderful. Pete says he's watching Carl Icahn. He's going to be special counsel on... What does that mean, Pete? I'm not familiar with that. Special counsel on... I saw an article this morning where he said he was surprised. Okay, he's going to be special counsel on regulations. Now, those of you who don't know Carl Icahn, he's what they call an activist investor. If he sees a company that he feels is being wrong, being run improperly, he will buy up enough shares to develop a controlling interest in the company, which often will then win him a seat on the board, and he's able to actually go in and, create change at the upper management level, which then trickles down to the workforce. Some love him, some hate him, but he is a smart investor who has done a lot of good over the years. So Trump picked him. I support him. Hey, Bob, I'm going to voice your opinion. I know it's different, but that's okay. He's so arrogant in his approach to global things. There's more at stake here than just the USA. Like us up here. We're human too. Mostly, he says. Look at it this way. Globalists needed to grow a middle class in Asia. But the way they went about it was by gutting America's middle class. Globalists needed to grow a middle class in Asia. But the way they went about it was by gutting America's middle class. Huh. Pete, you might want to, if you want to explain a little more about that, I'd be interested. I know you know what you're talking about. I'd like to know. Jeanette says, the U.S. granted favored nation status to China, and we got nothing in return. China and Mexico have raped the U.S. unmercilessly without our consent. This must be changed. Go get them, Jeanette. You said it. You said it. Now, the next comment, off Long Island, I don't know what that means. Too deep to get out there at present. Asia has the jobs that Middle America used to hold. Okay, Pete, I got you. I got you. Now I understand. Was that message for me, Pete, off Long Island? Or was that for Michael? Okay, what's off Long Island? Oil. Oh, okay. Oh, so that's where the largest known reserve is, off of Long Island? I'm assuming that's what... Yeah, he said yes. Huh. Really big. Not sure. Okay, not sure the biggest. Okay, so it's really big, but I think that combined with all the other oil that America has, I don't think today's Ed Coury Day. Is it? Ed was here last week, so he won't be back. In fact, he might even not be back next week. I remember him saying that. He might be gone for the holidays. Hey, John, come on in. Now, I just got a text from Bert that he and John are here, but for some reason, I can't hear them. Bert, I'm going to ask, and you can text me back. Are you dialed in, or are you on the headset as normal? Okay, because see, I haven't done anything different. My whole rig, everything is set up exactly the same as it always is. I don't know why I can't hear you. Does anyone in the audience hear them? Normally, as soon as you come in, we hear like a crackling noise, and then well, they dialed in as usual, and that's the first time. This is the first time that's ever happened. Well, if I just use my phone, I don't think that's going to be. We already have audio issues, but I'll try it, Preet. I'll call him. Bert says I'm muted. Oh, okay. Well, how'd that happen? Your staff, you should never be Bert. Oh, your staff, you should never be muted. You can talk now. I'll be able to hear you. Talk, baby, talk. Now, Bert, it looks like you're muted on your end.
Open.
Ah, there you go, John.
Hi, sorry.
Thanks, Bert.
Yep, no problem, Dave.
Yeah, I called in. I mentioned, I don't like to interrupt you when you're talking. So. But,
Oh, that's quite all right. No, whenever I'm just rambling. Come on in.
Yeah. Okie doke. So you were talking about some deal in the Middle East this morning, and then you would talk about some movie or something on Netflix. I didn't hear what.
Oh, there's a movie on Prime, Amazon Prime, which is just like Netflix, but if you sign up for Amazon Prime, you also get a library of free access to a library of movies and TV shows that is almost equal to Netflix. And Amazon has done their own production called The Man in the High Castle, and it presents a what-if scenario. What if the Americans had not won World War II? And so in this television program, Americans are living, the Germans control the eastern United States, and the Japanese control the western United States. And so whether you live in the west or the east, you have to fetch and step and bow down and obey the cultures of those occupying forces. However, there's bad blood between the Japanese and the Germans because they don't want to split up America. Each of them wants it for themselves. So you've got the people, the American people being subjugated by these ruling parties, and the two parties fighting against themselves. So last season, the way it ended, we finally caught the back of the man's head who was the man in the high castle. We still don't know who he really was, and it just came out on December 16th that season 2 is now available. So
okay.
We'll spend the weekend watching that.
What were you talking about? You mentioned something about the Middle East or some.
Well, Trump has said that he is going to enact a 5% tariff on all imports, and he's going to charge even more to China and Mexico.
He said that? Well, that's a pretty big deal.
Yeah, this morning he said 5% tariff on all imports into the U.S. He would implement it through an executive order in the early days of his presidency. He suggested putting a 45% tariff on Chinese imports, said he would declare China a currency manipulator on his first day in office, and proposed taxing imports from Mexico, argued in favor of ripping up trade deals, and called the Trans-Pacific Partnership, or TPP, a rape of our country. So this guy is going to he's going to hit hard with boots on the ground. And I was saying, I know that a lot of us who voted for him at sometimes are going to wonder if he's gone too far. And we know that it's going to result in higher prices, that the prices that we pay at the grocery store and the hardware store and the feed store, they're all going to go up. It's called inflation. A healthy economy has a certain amount of inflation. And the job of the Fed is to partially try to balance that with the interest rates. So the question is, where the employees going? Like if we bring all of the work that's being done offshore, like in China right now, where they're making chips really cheap, if we bring that job home to America and hand it to Intel and say, now you figure out a way to make a good quality chip for our people at a good price. Okay, where are they going to get the workers? Now we go back to the HBC visa issue, because they're going to say, well, you imported the job back home, so now you need to import some workers along with it, because according to Janet Yellen's speech on Monday, everybody in America's got a job.
Yeah. Far from it. But, I mean, look, the situation is better, but it's not perfect by any means. I mean, the big problem, as I think I've said on the show before, the big problem is we're out 5 million manufacturing, or 6 million manufacturing jobs. We had 19 million manufacturing jobs in 2000. And in 2000, we had all-time record employment. I think it was about 162 million people working. And we are at about 158 right now, I think. So we are getting back up. And if you go to usdebtclock.org and you go out 4 years, the situation is better. We will hit new all-time highs in jobs sometime in the next few years. However, on a population ratio basis, it's we're actually not going to be doing as well. We need to have about probably 170, 180 million people at work in order to eclipse the 2000 number on a population ratio, because I think they're projecting the U.S. population at about 340 million by 2020, maybe even a bit more, versus less than 300 million in 2000, or around 300 million in 2000. So, and the same thing in England. England right now, Britain has the lowest unemployment rate ever. But in actual people, even though it's the lowest unemployment rate ever, the last time they hit that, there was about I don't know whether it was 400,000 people out of work or 4 million, but it might have been as low as 400,000 people. Anyway, it's 700,000 people now are out of work in England. It's probably 700,000 people out of work. So, but, on a population ratio, it's about the same. So we are actually making new lows in unemployment in England on a ratio basis. But the big problem is the manufacturing jobs, and they've got to come back. I mean, I think Trump's Buy American and Hire American is a great, mantra, and the more they use it, I mean, he's got to kind of make people think twice when they buy stuff or, from now on to buy American wherever they can. The more people do that, the stronger the economy is going to get, for sure. But in a way, over, putting tariffs on things, I mean, obviously people are going to be spooked by this Smoot-Hawley Act, which basically caused the depression, supposedly, back in 80 years ago, but 90 years ago. But the thing is that it's. I mean, you can say a lot of things about Mexico, but Mexico is buying an awful lot of. I mean, Mexico buys a tremendous amount of goods from the U.S. these days. I know they've got a deficit, but that deficit is really only due to the. It's only just a second. Sorry.
No, go ahead. All right, let's take a look at this chart while we're waiting on John. 64, 65, 63, 64 was my zone last week. Today's Thursday, so we get to share with the world. This week our zone was 67, 66. Oh, I still get the wrong. I don't know why it comes up like that sometimes. When I double click, I have all these options here, and then sometimes when I save and reboot, they don't populate. So anyway, 26, 27 is this zone we've been stuck in all week. Now you know. Now you know. When you keep hearing Michael say we're stuffed in the zone, well, there you go. 2 days worth being stuffed in the zone. The high, the spike high was 69. The spike low was 62. We're caught in a 7-point range, and that's giving a lot of leeway going with the spikes. The bulk of the range was about 67 to 65. Oh, I've never seen such, but now I have. Okay, the next zone down, as I told you earlier in the week, it's the same. Sometimes I run the formula, that's just how the math works out, 50, 51. So we take off this last week's trading zone business. And we've already passed Sunday night's Globex Open. Right here. Sunday night Globex Open. This is how tight it's been. Man, we used to go from, you've heard me, we went from zone to zone to zone, back to the zone, back to the zone, up to the zone. And now all I can say is we went from zone to zone. This is in a whole week. We went from zone to zone. And we almost went back to the zone. We missed it by 2 ticks. I can promise you, I've never seen that. We started publishing the zones December 14th of 2009, and never once has there been an entire week where we went from one zone. Actually, we didn't even touch this, see, because we opened here. We went from here up to here. So really, we only went from this zone almost to this zone. Oh my goodness. I'll tell you what, if the markets don't loosen up after the beginning of the year. Well, let's face it, you don't have to trade the S&P. You can go trade the markets where there's some volatility and some money to be made. I know everybody wants to trade the S&P because it's very liquid and because you can, you know, if you have an hour at 2 a.m. that you can sit down and trade, you can find somebody to take the other side of your trade at 2 a.m. with no problem. That can't be said of all markets. However, the S&P, crude, gold, and for the most part the euro can be traded around the clock. If you got the time, they got the time. Okay. It's just discouraging. All right, now what was last night's Concierge Trade Alert on the S&P? Let's see if we can uncover that mystery. Yeah, Frederick, we still got our 2 points. Yeah, you're right. We sure did. Like you always tell us, important prices are almost always tested. Yep, you're right. They are, Pete. They are indeed. Good Lord. Okay. Last night, Concierge Trade Alert was to sell 22.60. So that was a nice thing. You got 2 whacks at that, Jack. I say that with great love, Jack. If there's a Jack in the audience. So last night when I sent the email out at 10 p.m. again. Wait, that's not the right night. Oh, I just almost laid some erroneous information on you. Sorry. I'll get the right numbers. I was throwing out Tuesday number. Okay, Wednesday evening. S&P, okay, it's not going to be nearly as pretty. Oh my goodness. The sell side on the S&P, because I didn't want anybody to get just, you know, I didn't want to play it tight and have you get triggered in and then just stopped out. So 22.48 was the sell side, not 22.60. 22.60 was Tuesday night's sell side. Last night's sell side for Thursday session, which began last night at 6 p.m. Eastern, was to buy 62, and that didn't happen, and sell 48, and that didn't happen. So sorry guys, a whole lot of this going on, and I have no control over it. I do hope you understand that. If I did, we'd all be making a lot of money. Yeah, go ahead.
Sorry about the interruption.
Oh, no problem.
Yeah, I also wanted to say when I first came on that the market actually gave us a buy signal when the Nasdaq was down about 30 this morning, and maybe the market slumped on this news you're telling us about as well, or just pulled back on it. It was kind of a sharp fall earlier on, but I would say this is the beginning of the pre-Christmas rally now developing here. So I would say we're probably going to recover some or some of the losses by the close today, possibly all of them, and then maybe tomorrow continue the rally into Christmas. you remember we talked about this before, that sometimes the market needs to take a break, back off a bit, because it's obviously stalled at the 20,000, and then it could run up now actually quite sharply.
Well, here's my theory on that, John. Is there's a lot of money makers, hedge fund guys, and whatnot. Their year-end bonus. If we close the year over 20,000. There's going to be some Lexuses, there's going to be, some homes in the Hamptons. Some people on Wall Street are going to do extremely well if the Dow closes over 20,000 this year. So my thought is that they may be intentionally, as a group, they got, everybody's on the conference call, and they're like, come on guys, let's keep this thing in check, and next week, like Thursday, or better yet, even Friday, we'll open the gate and we'll let this sucker go through 20,000. We'll close the year above 20,000, and we'll all get a nice fat additional bonus at the Christmas party or the New Year's party.
Yeah, no.
Whatever they hand out the bonuses. You with me?
Yeah, that's definitely plausible. Yeah, I'd say that. I mean, this kind of, we could get this sideways action right into the end of the year as well, because in a way, the more the market goes sideways, the better chance it has of having a really strong start to next year. In other words, if it consolidates these gains here, going right into the end of the year, it could pave the way for a very strong upside breakout right at the beginning of the next year, and I think that's highly likely. Although I got to tell you, I'm a little bit concerned that Trump is coming out with these tariffs this early. Whether it's just a negotiating ploy, it might be. He might be.
Well, he's remember the art of the deal. He, right now, he's not even president yet. It's just talk.
Yeah. He probably wants to sound off.
He wants to hang over.
He probably wants to scare China.
Exactly. So that when it's time for him to sit down with his pen at the desk, they are in a more amiable mood to negotiate than previously, because he's already said what he thinks he should do, and now they got to convince him not to do that. So he's negotiating from a position of strength, and I think that's very wise.
Yeah. It's sorry, he's never short of saying anything dramatic, this guy. He always comes out with something that's going to make news, and obviously this is going to be big news. But as of today, the post-presidential rally, he's definitely number one of every. I think of 36 days after the election, he's number one. I think I sent you that this morning. Copy in an email. I sent you an email. There was a thing about the economic confidence is at an all-time record high right now. All-time record high. Economic confidence. That's a big deal. And approximately almost $2 trillion in value added to the U.S. economy. And here they are, finicking around about small things about Trump. They keep going after him about this and that. And he's increased the value of wealth in America by $2 trillion, and they're complaining. These people are totally nuts. They're crazy. They're pathetic.
Well, let me take a look at this report.
Increasing the value by $2 trillion is incredibly, it's real money. And the records that have been broken recently are the largest and fastest amount of money ever deployed into a market. It's a big deal, and it's all these indices making multiple new highs. The whole thing is incredibly bullish. There's never, in fact, there's never been anything like it. I'm telling you, it's never been anything like it, possibly since the 60s or even before then, because this advanced decline thing is, a lot of times during the 60s and 70s, the advanced decline was not leading the market like it's been for the last 2 or 3 years. That's what's making me think that that we're in some kind of a major third wave here of proportions that are, incalculable. I mean, there's just never been anything like it. And I think that, in a way, the recession of 2000, the pullback of 2000, it really scared, corporate America. It scared the management. They scared all the tech guys. So the tech guys got very, very lean and mean. And then, things were going okay up to 2007. Maybe they got a little bit, carried away. But remember, the tech didn't really perform that well in that. So then we had another crunch in 2009. So what this has done is it's made American management more and more cautious. And they've been pretty lean and mean. So corporate profits in this rally, corporate profits have been at all-time record highs consecutively for several years, for years now. The performance statistically for the market has been really tremendous. And now you've had this advanced decline line leading the market for years, not months, but years, making new highs. There's never been anything like it. There's never been anything like it. Not even in the 90s, in the late 90s.
This consumer confidence thing you talked about, is that an economic report that came out today?
Yeah, I think I sent you a copy of it this morning.
Let me.
1 second, thing.
Yeah, go ahead. Let me read you guys a message that I just got from Mike Reed regarding what we're talking about. Mike Reed said this reminds him of 3,000 on that thought in 1990. The market closed at $29.99 and didn't get to 3,000 again until a year later. I think he's talking about the Dow, when the Dow was back at 3,000. Is that correct, Mike? He's listening and communicating with me on the text message. We'll wait on his response. So there was no long trigger on the Dow. Yeah, you back? You back, John? See, in 1990, there was champagne and party hats ready for the Dow to close at 3,000, but it didn't and went into correction and then didn't get back to 3,000 again until 1991, finally. Got 1 point, We'll see what happens. We'll see what happens. What is the Dow cash number right now? It is, still checking. Dow cash is 19,908. So yesterday we kept flirting back and forth between 19,950, 19,960, back and forth, back and forth. Now it's broke down to 1990. I'm telling you, they're going to hold it back to next week. They're going to let it rip, and we'll close the year above 20,000. They want it to close in such a way that it doesn't have time. They're keeping the powder dry, and they're going to blast it through 20,000 maybe at the last minute, or at what point that they feel they'll be able to hold it above there until the final bell rings, signaling the year in. Mike says, it's amazing I can remember all that stuff, but not remember what I had for supper last night. Well said, Mike. I know the feeling. Still got our, okay, bonds. What do bonds do? All right, 2,200 right there. Oh, okay, on bonds, we were looking to sell 149.01. Okay, that went well. $149.01. Okay, there we go. Important prices, important areas, almost always tested. And so the first move down from 149.01 first two candles down. $148.30. Is that right? 149.01. Yeah, so that's 4 ticks, which pays $125 per contract. However, because of where your stop needed to be, chances are you didn't get out with just 4 ticks, not if you're trading this bigger picture scenario. The smaller risk produced the greatest potential. Okay, this first move down went to 148.22, so that's 11.
Hello.
Hey, go ahead.
Sorry about that. Just one of those couple of, sometimes when you're trying to get a hold of somebody and you know, they don't call you get a call back, you have to take it. Yeah, I'm not, this market just came to a small sell right now. Yeah, I wouldn't be surprised if we get a retest, but you know, normally one would expect to rally into Christmas, and so that's the basis of what I'm thinking here, is we might get a, you know, certainly if we start getting over, let's see, 49.30 on the NASDAQ, our futures would probably be the, let me just pull your, you got the S&P up there, so.
I've got bonds up right now.
Yeah, hold on a minute. I was just going to pull up the, okay, on the S&P, probably if we get up above 22.55, that's 56. That's probably a good enough reversal to get things going. And obviously, if we get above 60,
this formation right here, I think it's going to send us back down. We were caught in our weekly trading zone of 66.67. We were caught in that for 2 days, And then we've gone leg, retrace, and I think we're going to put another down leg down to 51 based off this little doji we got right here in the middle.
Yeah.
So those are my thoughts.
If we fail this afternoon, then the likelihood of a rally was somewhat diminished. I mean, listen, it's not a guarantee you're going to get a rally into Christmas, but not 9 times out of 10 there's a rally into Christmas. You know.
Yeah. I'm just curious how many people are going to be left, you know, to even trade tomorrow.
Sure. Is it an early close tomorrow?
Let me check. I don't think so. CME holiday calendar. Let's take a look. Christmas.
Are we back on Monday? Monday, or is Monday a holiday?
Monday's a holiday. There's no mail in the U.S., no banks. All right, I got the
Monday's a
calendar.
holiday. The following Monday's a holiday as well, right?
Exactly. Yeah. Okay, the PDF just opened. On Friday, December 23rd, equity, interest rates, FX, energy, metal, and DME products will have a regular close. Monday the 26th, Christmas Day, will be observed. Globex is closed. So Friday night, they're not going to open. Well, they never open the. So yeah, forget what I said. Monday, December the 26th is when we'll open back up for Globex trading. So we'll close Friday afternoon at 5 p.m. Eastern, and then we'll open for Globex trading Monday night at 6 p.m. Eastern for the Tuesday session. Monday night, 6 p.m. Eastern, and I will try to have your Concierge Trade Alerts out by 6:30 p.m. Eastern. However, your weekly trading zones, which normally come Monday morning at 6:15, will not come out until Tuesday at 6:15 because there is no market on Monday. So that's how we handle those holidays. So we'll be here for a full radio show on Tuesday and a full radio show tomorrow.
One of the things that's sneaking up on us that we've been talking about is, you know, and we did say by the pullbacks in the oil, is the oil is looking like it's going to close the year around, it looks like we could get up to 55 by the end of the year, which I think is an important number. We're at 53 right now on the February, and the market is kind of basing out actually, and looking like it could break to the upside pretty sharply in January.
The grains are closing early tomorrow. Livestock, dairy, and lumber is also closing early tomorrow. Now, as far as the New York Stock Exchange, that's a different calendar. NYSE holiday.
Look at the gasoline, Dwayne. The gasoline is making new 52-week highs right now here today. It's pretty interesting. Or yesterday, at least. It's pulling back a little bit today, but that's you know, gasoline demand is really running very high. It's record demand for gasoline, even at this time. Heating oil is not breaking out yet to new highs, but it's not that far away.
Okay.
And actually, the whole structure of this move, if you look at the way the heating oil has come off the bottom, had this kind of zigzag stuff going on for the last few months, and now it's breaking out to the upside. Generally speaking, I would say this thing has got a target initially of 1.8 or 1800, and then up towards 2 to possibly even up as high as 220. Next quarter, I would say that, you know, between now and May, usually the market rallies into Memorial Day. So there could be a huge run-up in the oil between now and Memorial Day. And
You know,
a little less.
I'm looking at this 2016 calendar for Christmas, and they've got it messed up. It says that each market will close early at 1 p.m. on Thursday, December 24th. Crossing session orders will be accepted through beginning at 1 p.m. for continuous executions until 1:30 on this date. So, according to this, the New York Stock Exchange is going to close. Well, wait a minute. December 24th is a Saturday. Oh, wait a minute. That's for 2015. I'm sorry. I need to be looking at. Wait a minute. Christmas, December 2016. They've got this calendar bungled up. I'm not going to even quote from it. It's not the actual NYSE calendar. It's some. I'm going to go to the NYSE calendar. Get the right skinny on this. 2016. December. They're going to be definitely closed Monday, December 26th. And it looks like, as far as I can tell, it's going to be regular trading on Friday for the New York Stock Exchange. They're taking Monday off, and that's it. Okay. So, all right, well, we can go on to other things. Look, that market turned. You were right. We're getting up over 22.55, 56. Sure.
Yeah, no, it's that. You know, this is. I think we're gonna actually this rally could get some legs still. You know, every rally we've had has sort of, you know, come alive.
Had we come down and touched that 51, I would have been more comfortable with looking to the upside, because when it doesn't complete, when it doesn't come down and touch, that always leaves me waiting. So anyway.
Yeah. By the way, yesterday we were talking about natural gas. Today is the largest decline we've had this winter so far, minus 209 billion. That's a pretty big number. So, you know, just last week and this week is 350 billion cubic feet of gas. And I think the previous couple of weeks were more than 100 billion. So, you know, we're sort of we've lost 600 billion. We've probably lost about 600 billion cubic feet of gas already this winter. Maybe as much as 700 billion. So, you know, a couple more weeks and we'll be out a trillion cubic feet of gas. I mean, this is quite a dramatic development, especially as we're coming into this winter with less buildup, the lowest buildup in years, and actually, technically, we're in a deficit situation with natural gas. So, even though the market tends to sell off on the news when it comes out, the natural gas, and that's what it's doing today. But just fractionally, it's only a small bit. But if we start taking out 36.25, I think gas could go. Gas has been pretty strong in the last few days, and it looks to me like it wants to go to $4. You know, it's really looking quite dynamic. It's run into a little bit of trouble here. So, but the next move, you know, could be if you look at where we came from 2,800 up to 3,750, in almost a non-stop streak higher. We pull back a bit, so the next move up could be some, you know, even if it's half that amount, it's going to take us well north of 4, and that'll be the highest level in some time, and I think we're probably shooting for, I think we can get to $4.50 to $5 per 1,000 cubic foot of gas. Sometime in maybe January or February. We could have a pretty big move in gas. And if that's the case, you'll actually have a situation where almost, well, no, not with it. You know, you have almost all the components of the energy sector will be making new 52-week highs simultaneously, and that's not a bad place to be from an energy standpoint. Yeah, see the way the market's starting to accelerate now. This thing could come ripping out of here.
It could. It absolutely could. Mike commented, John, the dust has been in a range for 6 days now from 64 to 73. It never filled the gap from a week ago.
Yeah, no, the dust is kind of acting, you know, pretty strong here. You know, the metals got up. They had a couple of rallies. They had a rally last night, gave some of it back. Had another rally this morning. So far, they've given most of it back. So the metals are, the platinum's been performing better, but even that's pulled back again. So it's sort of disappointing, to tell you the truth. The metal stocks, Royal Gold and Newmont, are not really pulled back that much. So you know, they have to see what happens after Christmas. Whether the gold can rally into the end of the year or not, it's debatable right now.
Yeah, possibly.
The other one is the grains. The grains are broken down quite below 1,000. The grains look to me like they got to go maybe test the lows one more time. They're kind of, you know, the fact that they couldn't. They gave up all the gains on this, off these highs. Remember, we talked with one of your contributors, and he thought they'd come back down below 1,000. And we basically both agreed that the grains might want to come back and test 1,000. Well, they've certainly done that, but the fact that they've broken down, being broken down under 1,000 now is not a very good sign for the grains. Yeah, look at the Nasdaq is really shooting higher here. I mean, we were down 30 or so earlier on, and they're already down 15 now. And if we go, I mean, if we go positive after being down like this today, it'll be quite significant. I think we're gonna break 20,000 possibly by tomorrow. I think we're going to get there. And if we don't do it by tomorrow, I think we might gap. You know what? We might just close shy of it, and then gap up. We're almost for sure going to gap up through next week. You know, we're probably going to gap right over 20,000. As a matter of fact, if we gap, you know, if we have a decent enough rally by tomorrow, we start heading back to the all-time highs on these markets, and then we gap, you know, into the last week of the year. That alone could be very bullish. What would be really bullish is if we gap into 2017. If we gap into 2017 in a really strong way, that will be that will almost guarantee we're going to have. The first 5 days are going to be very strong. So and the further we move away from that gap, the more bullish the market could get actually in this upturn. What is something? Oh yeah, NVIDIA. Remember we talked about NVIDIA? Remember I said it would go well above 100. I think it hit 108 this morning. So it had that pullback down to 90, and now it's at 108. I'd say NVIDIA is probably going to go, it looks extremely bullish. NVIDIA looks like it's going to go parabolic. So it could go quite quickly to about 120. The semiconductor index is performing very, very strongly. It could be the first index to make new highs again. So one small note of caution is that the mid-cap has started to underperform a bit here in the last couple of days, which probably could mean that the market momentum might be slowing a bit on the upside. I mean, remember I said that Facebook was struggling? He's having an awful hard time. Every time it gets over 120, it seems to get knocked down again, but it holds in the teens. I would say if maybe the next time Facebook goes above 120, it could be in for a bigger run, and it might have a decent run in the new year again, along with the other FANG stocks, Google and Amazon and these other stocks. But I wouldn't be so bullish necessarily on those stocks in the coming year as much as some of the other issues that are out there. I think you're going to keep, they may have topped out, these stocks. They may have peaked.
You think?
Well, they could have. They've had a heck of a run this year, and the fact that they're not confirming this uptrend, this breakout, is a little bit of a it's a little bit of a warning sign. So, that we may get some kind of a pullback. But if the market, remember, breaking 20,000, even though it sort of creates a bit of a drag around the number, once it gets away from 20,000, you're probably going to see a very strong surge. To get up to 22,000, possibly very, very quickly. And I think that the 19,000. We were 90. I mean, this is the fastest 1,000 points we've ever done on the upside in the Dow, from 19,000 through 20. So, the momentum is accelerating, and it's not inconceivable that we could have an even faster move from 20 to 21 or even 22.
Mm-hmm.
Could happen because remember the market likes to inflict the maximum amount of pain on people who, so the shorts could really, if the market really starts upward momentum, accelerating upward momentum, the shorts could get very badly hurt on a multi-thousand point run from here. Because remember, just like 1999, people were short on the way up. They think they're picking the top. This common, you get people coming in and saying this market can't go any higher. I have to short it. It's kind of like the people who don't understand what's going on with Trump. They just keep sort of loading it on him without realizing that he's way ahead of the curve and he's unstoppable. You've probably seen some of these YouTube videos where they go back and, everybody universally dismissed this guy from day one. They were saying he wouldn't last more than a few weeks, he'd be out of the race, and,
right.
And sort of universal, from all the liberals, they were, all the lefties, they were all saying, there's no hope in hell this guy could ever be president. He might as well get out now because he's wasting his time, and all that sort of comment, and all the laughing and joking about it, and then, and this was still going on, and, he could never be the nominee. He could never be the nominee of the Republican Party. Then pull back. I mean, one of the most surprising things actually was when he was a few weeks away. It was, remember, around the Indiana time, around about Indiana, when Indiana, I think he lost Indiana to the Cruise, and he looked like he was stumbling there at that point. And then that new guy came in and took over the campaign and basically said something like Trump will be he'll be the nominee in 40 days time or something before they even got to the convention. And sure enough, everything just fell into place. It's kind of, that was a big deal when that happened, when he suddenly sort of got the better of Ted Cruz, because it was a bit touch and go for a while there. And Cruz won quite a few states too. He did. I mean, he did.
That Corey Lewandowski could have cost him the election with that business. He might have been talented,
I mean,
but
he made
he had to let him go.
the changes he made. The other guy, what was Manafort?
Yeah.
He was good. He came in just at the right time, and I think when they got rid of him and put in Kellyanne Conway, and she came in just at the right time. So.
And she officially got her job today, counselor to the president.
Yeah, pretty fairly. She's smart. She's a good.
She's very perky, upbeat, and she's not afraid to disagree with him.
Right.
A few Sundays ago, she came on the Sunday morning news shows and said, "I'm very upset that you had that Donald Trump, that President-elect Trump had Mitt Romney up to the tower, because, in my opinion, there's no way he should be considered for Secretary of State." And Trump wouldn't let there's very few people he would let get away with talking to him like that. Even though it wasn't to his face, it was on TV. When he heard the soundbite, it had to sting, but he obviously respects what she says.
Yeah, I mean, Romney is I mean, you and I talked about it. I mean,
he would be a wolf in sheep's clothing if he got into that White House.
Yeah. I mean, look, what he said was unforgivable, really.
Absolutely.
So there's a lot to be said about that. But he definitely had, he certainly had the charisma and the presence and the stature to be Secretary of State. But this guy he's got now is probably the right guy. So I think he's actually a very good choice from the Russian standpoint, and probably with the Chinese as well. I think he'd probably really be a good ambassador to China as well as everywhere else, and especially with the Arabs. I mean, he's really a great choice all around. And he's a big guy, and he's not the son. I don't, he's not going to be intimidated by anybody this far.
Right.
Well, listen, thanks very much for the invite.
You're
Dwayne.
welcome, John. We enjoy it every day.
Okay, and look forward to last session with you tomorrow before Christmas.
Okay. All right, we'll talk to you then. Bye-bye.
Have a great afternoon. Bye.
You too. You too. Okay, guys. I can drag this out. I'm sure you probably got some holiday shopping to do, or some sugar plums that need to dance in your head. It takes 5 points on the S&P to reach your daily goal, if that's what you're trying for. This move down, which started out as a stop out up here. Well, actually, this was the stop out. This and this. You could have had two. Although this one, there's really too much risk. This one, the risk was perfect, and you still got stopped out. So hopefully only got stopped out once. But then on the way down, giddy up. That put in 15, okay? But based on that same theory, you might not have taken that. You might have waited until you could have a reasonable amount of risk on the trade. And now Remember, the minimum amount of risk leads to the greatest reward, almost always. And this went all the way down to 49.17. So 42 minus 17. 25. So that's $500 per contract available. And remember, when you trade the S&P, the Dow, the Russell, and the NASDAQ, you only need $500 margin to take that trade per contract. $500 margin per contract. When you get into things like crude, that's over 1,000, gold's over 3,000, because it can be so volatile. Check with your broker. If you're with Daniel's Trading, DT Pro, it's built right in. Just go to this guy, and then go to help, and then go to contract margins. It will open a window in your browser, and you can go through each and every market. Currencies, energies, financials, grains, indices. Just scroll down. It's 500, 500, 500. What's this? This you never have to worry about unless you hold an order open from 5 p.m. to the market reopens at 6 p.m. That's when you get subjected to the full margin. Why? Has to do with risk. I really, call your broker. I'm just telling you how it works. If when the market opens tonight at 6 p.m. Eastern for the Friday session, if you initiate a trade and buy one of those 3 contracts or sell one of those 3 contracts, it will require 500 in margin, not these big ugly numbers over here. So that's why we always say be flat at the close, along with all the other good reasons why you should be flat at the close. Okay. Should you be he left. Okay. Yeah, somebody couldn't see the chart, so he's logging out and logging back in. Okay, so we've covered the NQ. Go to the beans. 2,200 last night. Okay. And get rid of that. Go to this. Okay. This is the vertical line is when the email went out, 2,200. 10 p.m. Okay. Soybeans. Going to be buyers at 10:10, sellers at 10:03. No chance to buy 10:10. Did get some opportunities to sell 10:03. Okay. Sell 10:03. Reminder, partners meeting tonight, 9 p.m. Eastern. If you've been on the trial, you want to become a partner, Michael will set you up, get you going, get you your user ID and password and all that good stuff so that you can come to the CFRN Christmas party. Oh, I guess I should pick out some songs or something. All right. Cell 1003, the first 30-minute candle took us down to 10. So $10.03 took us down to 10. Yeah, so got 3 points there. It takes 2 points to reach your daily goal. Here we got down to $9.57. Yes, that's going to be 6. Remember, it only takes 2, but if you're shooting for bigger game, you got it. Okay, and last but not least, well, actually we got 2 separate issues here. We got this one that dropped to basically 10, so there's another 3. You might have taken that, or you might have got out with some of it, enough to cover your daily goal. But it came back up. Important prices, important areas are almost always tested. Look at that. I mean, that is a perfect example of what I mean when I say that. So it comes back up, gets over the trigger one last time, and so least amount of risk produces the great amount of profit once again. Okay, from 10.03 down to 10.03 to 9.93, that's 10. At $50 a point, that's $500 per contract available. 10 points, $50 a point. Okay, Russell, how you doing? $2,200. There is. There it is. I'm not a partner, but listen every day and have for years. Just want to wish you a Merry Christmas and thank you for your help. Alan, thank you. I know that you're a part of the audience on a regular basis, and I really appreciate having you here and knowing that you're here. And I wish you a very Merry Christmas, a prosperous New Year, you and your family. And even though you're not an official partner, you are certainly, in my heart, very much a part of the CFRN community. So best to you, okay? Okay, on this Russell, let's go back, 2,200. We've done that part. By 1385, not happening. How about being a seller at 1368? I think we can do that. There we go. Oh, I thought it was going to give him a 1 tick. As they say. There we go. All right. So this is Russell. It used to pay $100 a point. Now only pays $50 a point. We're very saddened by that, but they make the rules. We don't. All right. So sell 1368. Okay, let's move down, took us to 57.20. $57 would be 11. So it's 10.75. Why don't I just call it 10 and make it $500 plus per contract available. Okay with that. And then it came back up. You got up to 1368.10. Yes, it did. Came back down and closed it. I don't know if it went all the way back down or all the way back up because I wasn't sitting here watching it build. Got a feeling it went all the way down to here and it was made available 13. So there's probably about $200 there. Okay. Because I didn't see that develop. I can't tell you for sure. Okay. That we can, I think, I guess we got to do crude. Crude. Do that crude. Okay. Now, on my daily double on crude, I'm looking for crude to sprout its tiny wings and fly away. I'm starting to become concerned about it though because this CFMA1 is starting to hook over. It hasn't turned red, so as long as it stays blue, that supports an upward move. So if you're on the daily double on crude, hang on to your hats. The trade may be coming. Okay. I knew I had to wait for this pullback. I didn't know I might have to wait all the way for a pullback down to here for it to happen, but so far it looks like it would like to happen. We'll find out. Now, for the crude concierge trade alert last night, here's what I got to tell you. All right. Last night, 2200 hours. Reach 100. Okay. Now, what we're going to do, I want to pull some fibs from here to here so that you can see what we're dealing with here. The reason this can't get up through here is the 62% reverse retracement from the swing high to the swing low. 62, bangity, 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 bang. It's got to break through that 62. If it can't, it's going to get turned back down. And that trade that we have on is not going to get triggered. Okay? So, there's nothing to do but wait and watch. Now, as far as the Concierge Trade Alerts last night, that's a little different story. Crude oil, GCLG, be a buyer at 35, a seller at 31. Let's try that again. Be a buyer at 53.05 and a seller at 52.55. That makes a little more sense, doesn't it? Okay, sell 52.05. Not happening. All right. Buy 53.05. Oh, I wish that hadn't happened. No, it's okay. There's a little something there. A little wee something. If this thing ever breaks out of here, you can get through that 62. $5,300. I'm sorry, 52.55. No, that was the sell side. Buy 53.05. Buy. Fine. Okay. All right. We put in a high at 19. So that's 14 ticks. So it's $140 per contract. That's what it is. Of course, you didn't get it all. You left a little on the table when it pulled back on you. Or you got a pretty decent risk profile and you're still just waiting. Should you tell you how it would end up, but I don't know. So I won't. I won't tell you what I don't know. Promise you. Now, remember earlier in the week we drew a whole bunch of fibs. We started way over here. We drew from the low to the high, right? Then we drew from the low to this high, okay? So at the time, this was the most significant swing high and swing low in front of us. And then as time moved on and we put in this other high, that became the bigger picture. This remained the lower low. Lost that status today, didn't it? Okay. So I'll walk you through both of these, how price came down right between these two 38s, right at where I drew the circle, thinking that it might come to. And so far, it has done just about everything we said that we thought it would do. After we consolidated and came up out of here, we were looking at this. It's been very orderly. You see very few overshoots. High and back to the low. See these two 62% retracements up here, reverse 62s. Price came up to it, couldn't get through it, rolled it back down. Where? Right there. Previous swing low. Now that becomes an incredibly low risk trade to the upside. Except for the fact that they've already taken it out today. Let's add. All right, last night on the alerts, we're looking to buy 35 and sell 31. Bought 35. You wished you hadn't. Got up to 35.50, so I'm just going to call that a stop out. And then on the sell side, here, let's go back to when we mark when these things went out. 2,200. Alright, it's the sell side, it was 1131. So if we put a line through here, we still got to overcome that 22 thing, don't we? 2,200. So that's 21, 30, 22. And got it. Okay. So if you are selling 1131, it's going to be right across here. And so I know we stopped out on the long side. On the short side, from 31, we got down to a low of 29.70. So that's $230 per contract available. Okay, and then this one got down to 1138, 2870, and we were selling 31. Concierge trades, yes, they are absolutely taken during the Globex session, Dave. And all day. They're good for 24 hours. From the time they hit your inbox until, that's why I draw this vertical line. That's what time the email went out last night at 2200. 10 p.m. Eastern. And the previous day's concierge alerts are good until the next set comes out the following night. So 1131, this one got down to 2860. So at 28, so that's going to be 290. 290 per contract available. Okay. Now 1131 down to 190. And then this final one, you know, it got back to 31.5. Let's just leave it go. Okay. Covered everything. And we covered it well. Okay. It's usually one of the first things we do, but today it's going to be one of the final things we do. Talking about depression for 4 days. We're going to talk about something a little different today. And so this is Christmas. Now, of course, you would expect me to tell you the story of the baby in a manger. Maybe I'll do that tomorrow. Today, I'm going to talk to you about the hardest thing you'll ever do. Jesus, in Philippians 2:7, we're told how he made himself of no reputation. Okay? Son of God, Son of Man, but he didn't toot his own horn. He just went about his business. He made himself of no reputation and took upon himself the form of a servant. Scripture says, I have come to serve you, not to be served. The hardest thing you'll ever do is put others first and yourself second, because we intuitively look out for ourselves. Self-preservation is man's first instinct, but it doesn't work. Do you know how two goats respond when they meet each other on a narrow path down a river? They can't turn back. They can't pass each other because they lack the smallest bit of spare room. The goats instinctively know that if they butt each other, they'll both fall into the river and drown. So how do they handle it? Nature has taught one goat to lie down so the other can pass over it. Instead of seeing itself as a doormat to be walked on, the goat sees itself as a bridge to be crossed over. So it becomes a win-win. Now, this is a true thing. This is the first time I've talked about it, first time I've shared it, I've researched it. It's true. It sounds like a nice story to tell, but it's true. Now, nobody went out and taught these goats how to do this. It's instinctive. They just know it's the right thing to do and how to do it. Sometimes I think there's more of that good instinctual behavior in the wild kingdom than there is in the domesticated kingdom. The Bible says that Jesus made himself of no reputation and took upon him the form of a servant. And to do that, you must focus on other people's needs instead of your own rights. Think about that. President Calvin Coolidge once said, "No enterprise can exist for itself alone. It ministers to some great need. It performs some great service, not for itself, but for others. Or failing therein, it ceases to be profitable and ceases to exist." And that's true for any organization or business operation. And it's also true for you as an individual. People ask me, "Dwayne, why do you work so hard? Why is it always so important that you get to these mentoring sessions, that you be on time, all that?" I mean, it's people, they already paid you. I know. Now I'm doing what they paid me to do. Well, yeah, but I mean, you already got the money. I mean, come on. You know, if you're late, you're late. You know, if you can't make it, you can't make it. Well, I admit there have been a few times I've had to go to appointments and I've had to reschedule a mentoring session with someone. But when you sign up for a 90-day program, I'm committing myself to something bigger than myself. And that is doing what God called me to do, and that's to create a community of traders, a community of believers that trade for a living. And so I'm answering to a higher calling. I'm involved in something much bigger than myself. Now, do I get paid for being a part of something bigger than myself? Yes. But if all I had to think about was myself and trying to make some money, it would probably be hard to make some money. Life's funny that way. But when I let go of that and I focus on the success of others, bang. Think about that. Are you focused on yourself, or are you focused on something greater than yourself? If you want success in 2017 and you haven't had it in 2016, get your mind off yourself and get your mind on somebody who is less fortunate, has less, is worse off than you are. Invest some time, some effort, some energy, and if you can afford it, some money into that person, that family, that situation, that thing greater than yourself, and you watch. God rewards that. He's faithful. He's diligent. And here's the best part. Every time you sacrifice, every time you're like that goat that lays down on the trail so that the other goat can pass. Every time you sacrifice in order to serve someone, you're sowing seeds of blessings. And whatsoever a man soweth, that shall he also reap. And I got to tell you, God's economy is a whole different business than man's economy. If you don't know what I'm talking about when I say that God's economy is different than man's economy, come to the partners meeting tonight. I'll bring that scripture. I'll share it with you. 9 p.m. Eastern, okay? And I know you guys get tired of sitting around waiting 20, 25 minutes while me and Mike have our weekly business meeting and keep you waiting. So I'm going to really press in on him. Oh, jeepers. Just thought of something. I'm supposed to have that meeting with the CEO tonight at 6 o'clock, which is 8 o'clock Eastern. I don't know if I can get back here by 7. I have to talk to Mike and see if he can, if he's willing to just do it himself. I don't foresee a lot of partners being there. I think people are starting to travel and go places and do things, but it may be that I just have to put the CEO off until tomorrow. Or maybe I can go see him earlier today, but I think he says he wasn't getting to town until 6 o'clock. He did say he was willing to come by my house, but if I tell my wife this guy's coming by my house, then I got to spend all afternoon cleaning the house. I'd rather not do that. So, all right, that's my problem, not yours. There will be, whether I'm there or not, there will be a partners meeting tonight at 9 p.m. Eastern. And if you haven't gotten your research report, I'm going to make sure you get it before the market closes today, because I think you really need to have it before the market closes today. Okay? All right. Thank you guys so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.